Have you ever looked at your crypto portfolio after a market crash and wondered why your emotions keep costing you money? Maybe you bought at the peak during a FOMO rush, only to watch your investment plummet the next day. Or perhaps you panic sold at the bottom, locking in massive losses right before the market recovered. If this sounds familiar, you're not alone. Today, we're diving into the psychology behind these costly mistakes and how to fix them. We spend countless hours researching the best crypto projects, analyzing charts, and learning technical analysis. We believe knowledge is the key to success. But here's the truth. Knowing what to do is only half the battle. The other half is convincing yourself to actually do it when every instinct screams otherwise. The crypto market is a masterclass in human psychology, an arena where fortunes are made and lost in minutes, amplifying our most basic instincts. We think we're being rational investors, but often we're just reacting to fear and greed. This emotional roller coaster is where most investors get thrown off. Understanding your psychology isn't just interesting, it's the fundamental skill that separates consistently profitable investors from those perpetually chasing losses. In investing, there's a two-headed monster that has destroyed more wealth than any market crash in history. Its names are fear and greed. Greed is the intoxicating whisper that tells you a rising asset will rise forever. It's what grips you when you see others posting massive gains, sparking an intense FOMO that compels you to buy at any price. Greed clouds judgment, making us abandon caution. We stop asking critical questions like, is this overvalued? And get swept up in bull market euphoria. Then fear emerges when the party ends. It's the cold, sinking feeling as you watch your portfolio evaporate in a sea of red, making you feel vulnerable and foolish. Fear causes investors to sell at or near market bottoms, turning temporary paper losses into permanent financial setbacks, the exact opposite of buy low, sell high. This cycle, driven by greed on the way up and fear on the way down, is why average investors underperform the market. They're emotionally compelled to buy high and sell low, entering when it feels safe at the top, exiting when it feels hopeless at the bottom. We often praise good gut feelings and intuition. In many areas of life, this is valuable. But in crypto markets, your gut feeling is rarely your friend. It's not based on wisdom, it's a direct line to your emotional centers, a conduit for fear and greed. When you buy a rocketing coin on gut feeling, you're not being intuitive, you're reacting to FOMO. Markets are counterintuitive. The best time to buy often feels terrifying, when prices are low and nobody wants the asset. The best time to sell feels euphoric, when everyone's convinced they're a genius. This is why a pre-committed strategy is vital. It's a set of rules you create during calm, rational thought to protect you from your future emotional self. If emotional decision-making is the villain of our story, then dollar cost averaging, or DCA, is definitely the hero. DCA is simple. Invest a fixed amount into an asset at regular intervals, no matter the price. For example, $100 into Bitcoin every Monday, whether it's at $50,000 or $100,000. This fundamentally changes your relationship with market fluctuations. The primary benefit is automation, removing emotion from the equation entirely. No more agonizing over timing. When markets crash and fear is rampant, your DCA plan continues, buying more units for your fixed amount. When markets soar and greed tempts you to go all in, your plan keeps you disciplined, preventing overinvestment at peaks. DCA inherently reduces stress. While market timers are on an emotional roller coaster checking prices obsessively, DCA investors adopt a calmer perspective. Price drops become discount opportunities, not catastrophes. DCA builds the most important trait for investing success: discipline. Every scheduled investment reinforces consistency, training your brain to focus on long-term asset accumulation rather than short-term price movements. Let's see DCA's power through Alex and Ben, both starting with $1,200 to invest over 1 year. Ben represents the emotional trader, glued to charts, active in chat groups, waiting for the perfect entry. After weeks of market surge, FOMO kicks in. He invests all $1,200 near a local peak. When the market crashes 50%, his portfolio drops to $600. Panic sets in, and he sells everything, locking in a permanent $600 loss. Alex chooses DCA, $100 automatically invested monthly. When prices are high, she buys less. During the 50% crash, her plan continues, buying twice as much for the same $100. She doesn't check charts daily or worry about news. She trusts her system. 1 year later, at the same market price where they started, Ben is out with a $600 loss and psychological trauma. Alex has invested her full $1,200 through 12 purchases, with many at lower prices. Her portfolio is worth considerably more than she invested, transforming volatility from threat to opportunity. Success requires making DCA seamless and thought-free. First, embrace automation. Every major crypto exchange offers recurring buy features. Use them. Set your schedule and fixed amount without straining your budget. Next, cultivate patience by disconnecting from daily noise. Delete price tracking apps from your home screen. Unsubscribe from panic-inducing newsletters. Mute social media influencers who thrive on hype and panic. Your DCA works best when you're not watching it. A profound mindset shift is required. Stop viewing crypto as a get-rich-quick lottery ticket. Start seeing it as long-term wealth building like a retirement fund. You wouldn't panic liquidate your 401k over a bad month. Finally, commit your plan to paper. Write down what you're buying, how much, and how often. More importantly, write down why. Your long-term goals. This provides a powerful emotional anchor when market crashes test your resolve. Building meaningful wealth is a marathon, not a sprint. The crypto market's overnight millionaire stories condition us to seek instant gratification, but enduring success comes from discipline, patience, and consistency compounded over time. Your DCA plan embodies this long-game mentality. Each investment, however small, is a step in that marathon. $100 weekly might not look like much, but over 5 to 10 years, it becomes formidable, especially with asset appreciation. There will be times when your conviction is tested. You'll endure brutal bear markets, friends might mock your strategy, media will declare crypto dead. This is the crucible where most investors fail. Your commitment to DCA is most critical during maximum pessimism, so I encourage you to begin. Start small, start now, and commit to the process. Automate your investments, detach from daily noise, and focus on your long-term goals. The path to crypto success isn't paved with complex charts or insider information. It's built on simple, repeatable habits that make you your own best ally. If this strategy resonates with you, subscribe for more practical DCA strategies and crypto psychology insights. Stick with your plan, trust in time's power, and you'll be well on your way to achieving your long-term financial goals.